If you've ever seen the movie The Big Short, then you probably know that there are a lot of things that are paralleling from 2008 compared to right now in 2025 with the economy and even the housing market and now the job market. And if you've never seen the movie, I highly recommend you go watch it. I think you can even watch it for free right here on YouTube. But assuming you've seen the movie, one of the characters in the movie, played by Steve Carell, is based on a guy in real life whose name is Steve Eisman, okay? And he is the Big Short investor who got extremely rich during the last economic downturn because he saw all the warning signs and he bet against the economy doing well. And now, fast forward to today, he is worth $1.5 billion. And he just came out recently and said Americans are past living paycheck to paycheck. That's ancient history. Now people are living from loan to loan. Imagine how bad things have gotten in the past few years. And I have been hammering this point for people to get out of debt and for people to get their financial house in order because things are getting very tough out there with the job market when it comes to being able to get a new job, when it comes to the layoffs. I just made the layoff survival guide so people can navigate their way through this tough economy. But really, even before any of that happened, you really had to be working on your financial house so that way things are in order. But many people haven't been doing that. And now, just like in 2007, Steve Eisman is warning about how fragile the American consumer is right now. He recently came out and said that consumers are completely broke. If you actually deduct the AI expenditures, the US economy is not even growing right now. And AI is not going to come and save everybody. In fact, it's going to hurt everybody when it comes to how many jobs it's going to take away from the economy. We just talked about how the other day, Amazon announced that they're looking at getting rid of 600,000 people in the next 7 years. But Steve says, look, without this AI boom, growth would be nearly flat at around 0.5% growth, or likely even lower, not the 3.8% that the BLS is reporting as of the second quarter of 2025. Essentially saying that all of the economic growth that we are seeing right now is completely fake. And part of the reason that people are broke right now is because of what happened during the pandemic. Obviously, there's been a massive amount of inflation that has been created. But besides that, when we had massive stimulus being poured into the economy, what it did is it kind of made a lot of people look creditworthy. It made a lot of people look better off financially than they really are because everybody got some sort of boost, whether it was a stimulus check or a PPP loan, something like that. A lot of people took advantage of all these things. And while all that was happening, the economy was actually in full collapse. But the stimulus just kind of covered it up. But now that all the stimulus has dried up and moved to the top of the ladder in the form of asset inflation, like the stock market and the housing market, things like that, people are back to being even more broke than before. That's why we're seeing student loan delinquencies at record highs. We're seeing credit card delinquencies on the rise. You're seeing car loan delinquencies on the rise. And so all these people got a check that made them look richer than they actually were. And then the banks bundled those inflated loans into asset-backed securities, which is the same playbook that happened back in 2008. I even recently covered how a lot of these subprime auto loans are baked into securities into the stock market right now, and investors aren't even blinking, even though delinquencies are at all-time highs. Sound familiar? Right now, Americans are $1.2 trillion in credit card debt and $676 billion in debt with their car loans. And when you add in mortgages and student loans, it starts to look even worse than that. Americans owe $20.83 trillion on their mortgages right now. And they also owe $1.81 trillion on student loans. So it's no wonder with this record amount of debt and income not even keeping up anywhere close to where it needs to be to pay all this stuff off, that people are going broke. The 90-day credit card delinquencies have more than doubled since 2021, and auto loan defaults have also soared to a record high just this past month. And the banks who are desperate to avoid repossession, they actually don't want to repo your car because it costs them money and they're going to end up losing money anyways. What they do is they modify the loan, call them current, and then they just kick the can down the road and kind of pretend it's not a problem, just like the federal government's been doing with all the delinquent FHA loans. And they're not foreclosing on people. They might start doing it now. But prior to September of 2025, they were just paying the bills for people. They were just giving people loan modifications. They were just turning 30-year mortgages into 40-year mortgages, just kicking the can down the road. So we are now at a point in our society where about 69% of Americans live paycheck to paycheck, and about 25% of folks are using buy now, pay later just to pay for groceries. People are literally financing food and they spend the next 2 or 3 months paying for those groceries. And these interest rates can hit 36% after just one single missed payment. Everybody thinks that buy now, pay later is risk-free, and it is if you make all the payments on time, but you miss one and they got you, man. And that's why the entire economy is fake right now, because it's all based on debt, and it has been for a long time. But the situation has been amplified times 100 over the past 5 or 6 years, because pretty much all of the demand that's happening throughout the economy right now when it comes to purchasing, when it comes to GDP, is all being fueled by, number one, debt. People buying things that they can't afford, but it keeps the economy moving. We have easy access to credit here. It's too easy. That's why you see record amounts of delinquencies. Clearly, people aren't qualified to take on this debt. And then you have the ones who are not going into debt, the very wealthy people who can afford to pay for everything still, where the top 10% are accounting for 50% of the spending in our economy. So really, it's all just one big illusion, and it's going to be just a matter of time before this whole thing comes crashing down. And because America's consumers are completely tapped out, the only question left is how much longer can the charade go on? How much longer can the government pretend everything is fine? How much longer can the Fed pretend everything is fine and continue with interest rate cuts even though inflation is going up and no one can already afford things as it is? And that kind of brings me right to my next point.